rip and chop. Okay, we do have a nice bullish engulfing.
What's up, guys? How's it going? Hope you had an awesome weekend. Who we got in the chat? Tom Struct. Happy election. Yeah, I'll be voting right after the live. Anyone who's Canadian, I recommend getting out there today. It's the last day before you can vote. It's an important one, that's for sure. Crypto. Oh, you're second, bro, not first, but you're close. Off by like a couple seconds there. Have a great day. Thanks, man. Amazing wick on Solana earlier, about 2 hours ago. Well, maybe we'll check out Solana during the live today. All right. Well, I got to hang out with Alex Crypto last weekend, over the weekend. He's a freaking cool guy. His mom's pretty cool too. I got to meet his wife and his little hobbit. He's live right now. Talk about the market. I'd recommend checking him out, guys, if you haven't already. He's a great YouTuber, great trader. Trader first, YouTuber second, which is important, right? Yeah, he's a great trader. He does a lot of Fibonacci stuff. He uses microcipher part of his strategy, so he's got a good set of core rules and an amazing community. But yeah, let's check out Bitcoin. So we just had a wild, well, it was a slightly boring weekend. We had a decent change of character pump right here. We broke this level here. We ran up, back up to the like high liquidity zone that we were at before. And like we took quite a bit of like pretty much all the liquidity here, but now this became an area of importance. We need to get that higher high still in order to get us proper acceptance into the macro value area from back in between November and February. We dropped down to like a really important key level from this previous value area. We hit the value area low, and that looks like a 786 golden pocket zone right here. Yeah, so if we get the retracement from this low to this high, we can see that if you were to box your zone between the golden pocket and the 786, this would be a key area to watch. And we had a decent bounce off that area, but it was like right to the dollar pretty much on the value area low. So if you had that marked, that would have been really helpful for you as well. Now we're back at this key area. We did get a little bit of a higher high. So we may get a continuation to the extreme highs, right? Because we're here at an area where there's lots of liquidity. We didn't SFP off of it. So if we are going to fail here, we just need to wait for like a 5-minute change of character. Let's see where that level could be. So right now we've got, well, this is an improper pullback. You need at least 2 candle pullback, but we have a proper one right here. So this is the level that you're going to want to watch, because this is the current strong low on the 5-minute chart. So if that were to break based on the current structure, we might get like an ascending like head and shoulders pattern to help define that people are selling, right? Failing to create that higher high, break strong low. And then the immediate target would be this location right here. But if that breaks, then you can start targeting the previous value area high around 93.9. So again, I would box this potential zone here. Let me just grab that as your first immediate threat. If we break this low, this is where you'd want to watch. We also have the confluence of the VWAP slowly catching up. But this is more very micro stuff, right? So let's go take a look really quick while we're waiting on the price action. Maybe we'll get a trade today during the live. Let's pull a fib from this low to our current high, which isn't defined as the proper high yet. When you want to trust your fib pulls, you typically want to wait for the opposing change of character, because when you have that, then you could see where it could potentially retrace to after you have the change of character, defying that we might be having the reversal. So having a reversal statement first before pulling your fibs, it's helpful for knowing that your fib level might be more likely to be honored. And the confluence of what I said before, where you want to watch out for that value area high, seems to be the same kind of level where the golden pocket begins. So at this level right here, we have some confluence for a potential reversal. We have the point of control within the zone. We have the value area high at the top of the zone. So there's some confluence here for a potential bounce. And that could start to form a Wyckoff structure. So we'll see if that ends up being a conduit for a reversal there. So we can delete this and watch this little zone along the way and set an alarm for when price action closes or crosses this area here. So BTC potential short. Cool. Alarms are great for helping you guys stay off of the charts all day long. So yeah, if you don't want to stare at the screen waiting for something to occur, you can set an alarm for when we get to important key areas, so you don't have to waste your day waiting for your levels to be hit. All right. So that's Bitcoin. Let's check out the on-chain data and see how it updated today. Look at the relative unrealized profits chart. This helps us kind of get an idea. This tracks the how much profits people are in general, and it kind of gives us an idea of if people are new investors are coming in and if old investors are coming out. Because when new investors come in, that resets the chart. If old investors go out, that resets this chart. So it gives a really good idea of like where other people are at in the market relative to our price action. So right now, based on the price of 93,000.4K, 93,400, we're at 1.13. So that kind of tells us that we've got like quite a bit of room to go before we're in the overheated zone, and that's where we prepare for our bull market top. And that's also where we prepare for our altcoin season. We can have altcoin rallies before this occurs, but the true season, and it's only really ever happened while we were in this overheated zone for Bitcoin. A lot of people are taking profits, and they flow their funds in the network tokens, and then they flow their funds into the low market cap stuff, and that's when you start seeing things not really make sense, just constant pumping. A day looking at the charts is not a day wasted, but yeah, I get you. Yeah, well, that's true. Yeah, especially if you're a beginner and you're just trying to learn how to ride the bike, it's good to try to get some more screen time hours to see how the market behaves before you dive into it. So based on this chart, if we were to go straight up today with a single candle, we would get overheated roughly around like $180,000, $200,000. But we would have to go like straight up with like one single candle in order to get there. Because if we range, that allows the market to reset. And these ranges that we've been having since the all-time high have been creating incredible resets in the market. It's starting to validate more and more and more a super cycle theory. And I'm sure you guys might have heard that phrase like spoken a few times, but now it's starting to look more and more real based on the RUP chart. And the supply in profit and loss right now, 87% of the supply is in a profit. That gives you a decent gauge of like what percentage of the supply could contribute sell pressure, or more likely is to contribute sell pressure. So normally when this is around like 95 or close to 100%, you can anticipate sell pressure for sure. But this isn't like a way to call the top, the bet. Like this will, if it's at 100%, obviously you want to prepare for your other core rules to be met. But think of it like your first rule of 4. You want to like have this make you look at other stuff like the RUP chart, or the daily chart on Bitcoin to see if we get that change of character occurrence. Like this is like rule 1 of 4 to prepare for the all-time high or the bottom of a cycle. And if you're looking for a bottom, you want it to be below 50% of the supply being in the profit. And that has called the bottom like perfectly every single time. Going back to Bitcoin, are we getting a pullback? Okay, good. Yeah. I kind of want a pullback here so we can define a level for a potential stop loss if we do jump into a short. But let's look also at the liquidation, the liquidity heat map here. Let's go to the daily quick. I just want to see how, just to refresh my memory, how long it's been since we were at these highs. 60 days, okay. All right, where's the liquidity heat map? Right here. All right, so we grabbed quite a bit of liquidity, about $500 million or so. I believe there's more resting up here. We still have quite a bit of weighted liquidity at 97.7, but we're on our way to taking it right now as we speak. Let's look at the last, how long we've been in this active range for. We've been up here, kind of building a regression trend almost, right? Here to here, about 5 days. Okay, yeah. This is the 1 week chart. So we can see over the past 7 days what kind of liquidity was added and taken throughout this range. We can see that we're starting to stack more and more below us and less above us over the past 7 days. We keep taking what's from above and then adding from what's below us. Other than that sweep we had over the weekend, we came down, grabbed quite a bit of liquidity before sparking our way back up when we bounced off that value area low. And now locally, the closest amount of liquidity that we have is about 90 million at 96.2K. Wait, what was that number again? It was 96 million, right? Yeah, 96.2. So we're about $1,000 off. That's where the macro point of control is. So we got quite a bit of liquidity that's stacked from this high here for 92.6K. Yeah, 92.6K. We have about $200 million resting right there in liquidity. So that could act like a magnet. If you're a market maker, think of it as an exit plan, right? An area where you can exit the market with the least amount of slippage or price adjustment. What did we do with Alex Crypto and I? Basically, we hung out. Like, we didn't really do much, like anything exciting. He had brought his Hobbit with him. I had my kids, so they were playing. His mom was jumping on the trampoline with my kids. It's kind of funny. Kyle, the right side of your screen is cut. Oh yeah, I kind of did that on purpose. Yeah, cut my screen so you guys can see the chart a little bit better. The right hand side, all you're really seeing that you're missing out on is a piece of my watch list. I hear an otter. Yeah, but yeah, we just hung out, showed in the studio, had some Chinese food, just chilled out. We had a lot of fun. It was kind of cool because it was the first time we met in person, but it felt like we were friends for years. Maybe that's what it's like meeting an actual person that understands crypto in person, because I haven't met one before. But yeah, it's pretty cool. All right, and someone want to check out Solana. You said there's a cool, crazy wick. You can take a peek at Solana and see what's going on there. But this is kind of my plan right now for Bitcoin today. I am preparing for that 5-minute change of character and see what kind of structure we might get. If we instead continue to go up further up, then I'm going to be watching for resistance here at 96.2. There's the large, heavy-weighted amount of liquidity there that could be used as an exit plan for anyone who jumped in down here. So if you're a market maker looking for the least amount of slippage for entering, they came down here. This was a great time for someone like them to enter. If you were jumping in with $40 million of volume or more, this is a great opportunity to jump in with the least amount of slippage right down here, right? And if you're looking for an exit plan, right here would be a good area to prepare to exit if you're a market maker with a low amount of slippage too. So if you're to think like a market maker and where they're wanting to enter, it's usually where all the liquidity is. And that's why it's really important for you to know where the liquidity is so you don't become it. So once a strong high is generated, you can anticipate that that area is guarded by a market maker, and you can validate that by looking at the order books and see if they're contributing sell pressure with limit sell orders to like influence the market to draw the price down further. Fairly similar to what we saw over here when I was giving the signal for the long with a massive sell wall right here. If you can see something like that around here as well, after an entry might have been made, you'll start seeing sell walls generated to influence the price to go down. All right, and I believe we're at an 886 based on how high that is. So let's pull a fib very quick. Yeah, we're at an 886. For those of you who don't know what an 886 level is, think it's considered the platinum pocket or the platinum golden pocket. And some people use it as your stop loss, but I don't normally recommend that. You want to use structure as your stop loss. What's up, Kyle? Will all your streams be this time from now on? Yeah, I'll be doing a morning stream every single weekday at 8 a.m. till usually around 9. All right, so let's take a peek at Solana for, what is the name? Tom Struct. Okay. Oh, there's the wick you're talking about. Yeah, kind of a whipsaw doji. Let's take liquidity from both sides and be a rude kind of candle. Yeah. And then we double topped, failed to create a higher high. We came right back down to this little demand zone. Similar to what kind of like what we're expecting with Bitcoin, right? Coming down to this little local demand zone where we had this big run up. Created some order blocks there. Solana was kind of leading the drop, right? They already came up. Wasn't a change of character, not until we break this low, but we did have that double top structure that helped to find that break. And right now, Solana is bouncing off of a previous value area high. We've been dancing above that since the 22nd for about 5 days. We could break this down now. We can draw a rectangle off of this little zone here. We have a demand zone there. We had the impulse move up. Right? Impulse move up, built a base, another impulse move. You can consider that a form of demand, just like you could with this. You can consider the supply, right? We can mark this so it's brought back. Visual order, send to back. And then we could also add a fixed range volume profile from the start of this consolidation till here. I will not include the demand zone until we take the demand zone and come back up with acceptance. Yeah, right now we hit a value area high. We're dancing right now at the point of control. And if we break that, get that 5-minute change of character, we can anticipate for Solana to come down to its value area low right here. So let's zoom in a little bit so you can see what I'm talking about. So right here is the current strong low. So if that breaks, we'd likely have the confluence. It looks like we're pulling back right now to test the POC. So if we get that lower low and break a structure, right, we get the confluence of that. So the internal break of structure would give us the more external change of character. And that would very likely drive the price down to the value area low. Watch the bottom of the wick right here. There could be liquidity there that could induce a reversal. So just watch out for that. Basically, the bottom of the regression trend, there's a lot of confluence for us to actually come down to this value area low. Because we have the regression trend start here, where liquidity basically starts, right? So we're stacking liquidity after every break of structure. Think of the order flow. Think of where the stop losses are, where the liquidation levels are, as price action progresses and gives us breaks of structure, right? How traders are going to behave. And you can see that here, traders will find an opportunity to guard their capital off all these breaks of structure along the way up. So if we break this and get that change of character on Solana, then 148 is a really great target to watch out for. If we deviate further down below, then this demand zone is a really important spot to watch for a reversal as well. If we instead come down further and use it act as a form of resistance and get a break of structure for confirmation, that confirmation is going to act like confirmation to a massive head and shoulders. And the measurable target for that, if that were to occur, you'd likely need Bitcoin's kind of support with that if Bitcoin loses some key levels. But the technical target for something like that, you grab the high with a trend line and you work your way down to the support. And that will help you define the volume momentum of that structure. And it gives you an idea of the continuation path. And ideally, this is the target here. And you look for confluences and you look for barriers along the way down. We have like a POC along the way down here. We have a little micro demand zone. But after we pass that, hitting the target will be relatively easy because we have like a quick move here. So we could very likely have a quick move down because of how it's going to impact the volume profile data. But yeah, that's Solana. Thanks for pointing that out, man. That looks like a good opportunity for anyone who's looking for shorts. So if you have two shorts in mind, like we're looking at Bitcoin, we're looking at Solana, it's really, really good practice for people to look at your opportunities, whether it be 2, 3, or 4 opportunities, and pick which one has the least percentage drawdown, the least amount of risk, and the best risk to reward ratio. Ideally, the most important thing is the risk to reward ratio, but the drawdown percentage is going to define what kind of leverage you're allowed to use, which really isn't that important unless you are trying to be consistent with the leverage you use if you're a high leverage trader. But yeah. All right, so that's Solana. Let's see what's going on in the chat here. Okay. What's up, Kyle? Hope your streams. Oh, yeah, okay. Could you please do TE on Qubic? Yeah, we can do TE on Qubic. Crypto, the 886 comes from the square root of the golden pocket ratio, right? Nice, man. Yeah. How many times can demand zone be considered? According to Brewberry, once it's tapped, it deletes it and doesn't consider it anymore. Well, Brewberry is a really good trader. So you definitely want to, when it comes to order blocks, when it's tapped once, like an order block is considered a form of demand. It's mitigated the moment it's tapped the first time. When it comes to like full-on demand zones, you can trust it a lot less. However, the mitigation's complete when we come down to the bottom side of it. So you can keep trusting it, but trust it less and less and less every time it's tapped. Think of it like a piece of armor that's slowly getting chipped away by a sword. and eventually it's going to break, right? We could come down into this zone after tapping it and build like a double bottom structure, and then get acceptance out of it, and then come right back up like we normally would. So with demand zones, yeah, like I said, every time it's tapped, trust it less and less, because the demand, the buyers in that area will be getting weaker and weaker and weaker if we don't cycle our way back up to the highs. Because those buyers become repeat buyers usually when we get to like our local targets, local highs where liquidity is. And when they exit, they can be repeat buyers, right? And makes it strong, basically strong again, if that makes sense. But yeah, consider it weaker and weaker and weaker, and just know that you can come to the bottom of a demand zone before it's considered completely mitigated. But order blocks, you definitely want to trust it as if it's been completely mitigated just by a single tap. Just smash the like. Thank you. Thanks, man. Appreciate it. Here to smash the like. I appreciate it. What's your thoughts on vector candles? Do you like using them? I like watching them. I don't use them as a part of my core rules or anything like that. When I see a vector candle like this blue one right here, I anticipate that we're likely going to come back down and reclaim it very shortly afterwards. So I'll watch them, and I like to keep an eye out on them because they're great for confluence, but they're not a part of my core rules or anything like that. And if I see a green or red candle populate when I'm using vector candles, then that gives me an idea that there are a lot of participants entering with the same idea that I have. If a key level breaks, like for example, if this key level breaks and we have like a red candle populate, then that's telling me that there's a shift in the volume trend. There's 150% more volume in that candle than there was in the previous 14 candles. So a lot of trade participants are agreeing with my idea. So if I see like a red candle print, then it just helps me build confidence in my trade. Kyle, do you know how you can connect your Bybit account to TradingView? Do you trade directly from TradingView, or do you use the Bybit app or website? I use the website or app directly. Nothing against TradingView. However, there are a lot of times where the ping is kind of off. So if you try to set up a signal system or an automation or trade through your TradingView account, sometimes the communication of your entry is delayed to the exchange. So there's one thing that could harm your trade entry is that delay. So I don't do it just because of that reason. Even if the delay is very, very slight, it is a setback that you don't technically need to have. It's great to use TradingView for your technical analysis, but when it comes to actually taking action, it's best to do it directly in your exchange so you don't have to worry about that delay. The delay isn't common, so don't think of it as I can't do this kind of thing. But if it's just a barrier that's more frequently capable of happening, I'm not going to accept that kind of thing. I want to make sure that I have the least amount of obstacles towards trying to enter my trade and it not be delayed. You already have to worry about slippage, right? Why worry about another thing that could impact your trade setup? All right, see if we claim this high. If we claim this high, then we can rotate our key level from here to here, because this is the current week high. If we claim that, this becomes our new strong low. So we got to watch the wick here if we get above that. This is also a good spot to prepare for a local SFP. If we grab this wick and close back inside the range, then we have a local SFP, and then you target, as an SFP trader, you'll be watching this low right here as your key area. If we break that, then you have the confluence of the change of character, and depending on the zone, it could help you define a continuation. And that's what, like, knowing more and more rules is going to help you see potential continuation areas. Like, different strategies can help you with your core strategy. We got a momentum candle here, so the chances of this SFPing is a lot lower. No problem, guys. All right, let's do TA for vacation on Qubic. That's why he's here. So while we're waiting on, we got about 3 minutes and 48 seconds on this candle. I want to see if potentially it FSFPs. But like I said before, this momentum candle, I'd say it reduces the chances by close to 70%. Like, every time I see that occur, we don't normally get the big drawdown. Unless we have a tweezer reaction, but that's a tweezer reaction. That's another reason to short too. So we have a Qubic chart. So I can just open that separately. What were we looking at last time? We were on the 23rd. It was around here. And we got the uptrending support drawn. We got our change of character occurrence. You'd watch these lows along the way. But it looks like we came down to a value area low before we had a good bounce. We bounced off this demand zone once, and then we cut right through it after that. We got downtrending resistance here. I believe we are in a macro zone, right? A really important macro zone. We zoom out. Yeah, we are. Okay. So we're in that area where we're trying to get acceptance into the zone with a break of structure occurrence in the higher time frames, like the 4 hour, but we have not got it yet. We failed to get that higher high. So this pennant that we're building right now could provide us that, and even give us a rotation up to the value high, but we have to watch out for the 200-day EMA along the way up. So we're in a big key. We're at a core area of importance right now. We had this previous value area for Qubic for 140 days. And we're at the value area low right now. We're bouncing off of it. We're bouncing off the POC as well. So we're building technically a continuation pattern. These structures are bearish while they're active, but they are more likely to break to the upside because of how more of the liquidity is being taken and where liquidity is being added. We're stacking more and more above us while taking from below us. If the support looks like it's beginning to uptrend a little bit, that could. All right, so let's go zoom in on the 15. Yeah, we're getting close to that area. So we got the internal change character occurrence already. But this is a key area you're going to have to watch here, man. If you want this to go up, this is your first key area you want to watch. It'll validate a macro double bottom. Unfortunately, it's ascending a little bit, which is best for like R&R, but it's not great in the sense of like the liquidity behavior. You kind of want the lows like swept a little bit more before going up. So I'd watch this area here. And if you do decide to take action internally, just make sure you watch this area as a key area of resistance, as well as this local high. If we get past these two barriers, then the chances of us getting a rotation to the value high is much, much higher. But like I said before, watch out for that 200 EMA. It's barely respected with this asset, but it has just been created. So a lot of the time 200 EMAs are used algorithmically through automated systems. And because it was just created on Qubic, there might not be traders that are using it. They want to see how it's respected first. Like with Bitcoin, the reason why the price action is so wild and ping-pongy around the 50 and the 200s because a lot of traders use algorithmic systems to enter and exit the market with them. And drink some water here really quick, guys. Well, we got that SFP on this candle here. Grab local liquidity, SFP'd. So now we're very likely coming down right here. Let's see what the R&R is. Use your stop loss will be right above the wick. This is now the new strong low. Right here. So if you use changes of characters as your key area of confluence, you're going to have to wait until this breaks if you're an SFP trader. It's already been confirmed. Do I enter on the 5-minute SFP? Yeah, sometimes. If I was looking at the chart at the moment that this happened, I probably would have entered. Might get an opportunity for a pullback. We kind of need it if you want the R&R. I should log into my Blowfin really quick. One sec here, guys. Just get my security stuff done. By the way, if you guys are looking for an exchange to trade on, I recommend Blowfin. I got a link in the description if you guys want to save 20% on your fees. And we also do we commonly do trading tournaments as well, where you can earn cash based on just a community tournament, like no outsiders allowed kind of thing. So yeah, if you use that link, then you automatically get access to those tournaments. And it's a P&L tournament, so it's not based on volume, so you don't have to worry about like putting in like a crap ton of money into it. You can use a small amount of money and then be able to win yourself up to like 250 bucks. We're working on getting those prizes bigger, but we just need more volume first before we can do it. What do we got? Sui was a request. We can look at Sui. If you're looking for an entry on Bitcoin, you might need to do it via limit order. We got the confirmation occurrence already, right? We got the SFP, the local one. So you want to try to jump in on the limit to get yourself better risk to reward ratio. Then you can target this low, and then hopefully the low is broken so you can stay in the short, because that change of current behavior, change of character could bring us down to this demand zone. And if we break past that demand zone, then this is the next key area around 93.9. In the exchange here, let's get, and make sure you manage your risk properly, right? I always risk to lose the same amount of money in the same accounts every single time. So if I, like for example, my swing trading account, I always risk to lose $1,000 in my trades every single time. So my wins can outweigh my losses. With my scalping account, I usually try to risk to lose $100, but I'm going to scale that up now to 300. So I grew my account to 30,000, so I'm just gonna risk to lose that 1%. All right, I'm gonna try to get in at the top of this local wick here. If I don't get in, then I don't get in, and I can look for the change character. Not this wick, by the way, just this one right here, where this little doji is. And I'll be using about 5x leverage. And down we go. When's the next tournament? I'm going to make an account. I'm going to talk to Blowfin today about that. Our last one was like 2 weeks ago. We've been trying to do one every single week, but my Blowfin manager was busy for about a week. So yeah, normally it's going to be every week. So you can prepare for that mentally. And I'll try to get one started up very soon. Sui was a request. So we got to wait on Bitcoin here. Let's open up Sui. Oh wow, this thing didn't stop. When we're looking at Sui, I was kind of surprised by the target. And we built this double bottom structure here on the daily. And I saw the measurable target being way up here. And I was like, it'll probably take several days to get there, but that target's definitely possible if we break past here, right? Lots of confluence for resistance here. So I figured that would likely be the target being undercut. And some people did react to it. We did see traders like get out. Right here, we built a small little regression trend against it. But yeah, we just kept on going. Now we have like a lot more structure up here. We just claimed a higher high off of broke a really important key level at 371. Currently at a value area high. This is an area where most people will prepare for shorts. Looking at the 15-minute time frame, we have if you look at the flow here, we have market structure come up, proper pullback, broke the high, break a structure, new strong low, come up, proper pullback, broke the high, new strong low. All right, and now we're pulling back again. So this is the current week high, and this is the current strong low. So this is an area you're going to want to watch to see if it induces a drop. And currently, right now, if we fail to create that higher high, we're building that head and shoulder structure, right? That define a strong reversal, and it's right at a value area high. So if we confirm this break to the downside, we get acceptance into the value area simultaneously, then we can start targeting the POC and hopefully the value area low to maintain this range. The POC is a huge key barrier. However, you do want to make sure you're watching that VWAP too. Like that VWAP can wreck your day if you don't pay attention to it. So it's good to set an alarm when we tap that zone in case we tap it to continue to go back up. A VWAP is actually a good idea to have a part of your core rules. What's really nice to see is if we had like price align with the VWAP in our key area, the VWAP catches up. We need to be ranging here for a few hours in order for that to be possible though. Because we break and we get below the VWAP simultaneously, that's amazing confluence for a short, because then you have the VWAP protecting your capital whenever you put your stop loss, and preferably have your stop loss above like a strong high when you're doing your shorts, or strong low if you're doing your longs. Yeah, this is definitely a zone where you want to prepare for a short. So I'd mark this level here. 370 is your key area. Let's see how the price actually behaves. There might be an opportunity to front run it. There's always opportunities to front run it depending on your strategy. Especially if you're doing SFPs like we were looking at with Bitcoin, right? SFP is a form of front run to the change of character. Kyle, what 5 indicators would you use for range trading? Fixed range volume profile, RSI, and what others? So yeah, RSI is great, like you said. Fixed range volume profile is amazing. However, the fixed range volume profile, like I could pretty much do without it. Like I can use it, I can visualize where the highs and lows are, where the value area mostly is by looking at the price action. But yeah, fixed range volume profile is really, really important. The RSI, I would recommend the VWAP as a really important one. 5 indicators. Market candles is your best indicator, honestly. Like you can have a 60% win rate using nothing but candles, as long as you know where the highs and lows are and where the strong lows and strong highs are for your like change of character and your break of structure occurrences within a range. You can do quite a bit with just market structure. And if I were to choose others, maybe you can, yeah, understanding fair value gaps is helpful. See where the fast moves are likely going to occur. And CC Yada is another great one too. Like CC Yada is one like you can kind of visualize on your own, but it's a pain in the butt to try to do that. So CC Yada is a great one. When you look for the 9 flashes, use them in confluence with your key areas. Right? You can see you get decent pullbacks every time they occur. The red is the opposite, right? If you see red 9 flash, it usually indicates that we're going to have a reversal. Think of it like an exhaustion indicator. The CC Yada. It's supposed to be called the TDS sequential, but they changed it. There's something that went on with the trademarking rules or whatever with TradingView. Anyone who's built an indicator will understand what I mean. It's a huge challenge to try to keep your indicator on TradingView sometimes because they have a lot of like rules that they don't really like to tell you, and they will just remove your stuff all the time. But it's a candle counter, basically. It's counting how many candles were simultaneously in a profit. And when you get to 9, it usually indicates a reversal, especially on the daily. And if you want to find it, yeah, just type in CC. Or maybe it might not be that hard. Easy, actually. It's CC by Yada. Consecutive candles. There it is, yeah. Consecutive candles, multi-time frame. That's what you're looking for. There's another. So you have built indicators. I've built a lot of indicators. Yeah. It might not come up for you. That's the problem. You search up InvestiShare. And we've got a stop loss management indicator, a clairvoyant strategy, a trade hunter strategy indicator, Bollinger Band strategy. But they might not come up for you. All right, guys, what else do you want to look at? We're kind of just waiting for this potential SFP to complete its target. We're now in a pullback area, so if we were late to the party, it's a good zone to prepare. Let's look at the 3 minutes, see how it's behaving. Yeah, so this is a good spot to jump in if we're late. This is the invalidation point right here. So if this gets hit, don't be moving your stop loss, because that invalidates the move for an SFP. Now's the time, yeah. I know it's scary to get in during those those pullbacks, but those are the best times to get in after your rules are met. If all your rules are met and you see a pullback like that and you haven't been able to get in, try to take action on it. Just ignore the fear. And just jump in and keep your stop loss in your zone. We want this. We got a 1 candle pullback on the 5. I wouldn't mind just going straight down from here now, honestly. That's a blowfit side look like. Not blowfit. Yeah, blowfit. Just watching my... Okay. Well, I'm in the trade now. Didn't get it at the top, but... Oh, Canada. Yeah. What's up, guys? In the course, no one you mentioned, I saw InvestiShare indicators. Yeah, I gotta clean up the indicators a bit, make things a little more accessible for that. I know it's not really something that like we technically offer yet with InvestiShare, but that's definitely something I want to offer going like in the future. Okay, we got that pullback in the brick of structure on Solana off of the POC. But we haven't got the change of character just yet. Let's see how this does. I'm going to take a peek at, I haven't even look at this upcoming week and see what's going on for US dollar impacting news. Jolts is on Tuesday. We got our election today in Canada. Non-farm employment change for US. Okay. Unemployment claims on Thursday. Unemployment rate. Okay, so it's quite a bit of stuff going on this week. So it might be a little bit of a volatile week, guys. The awkward price action. What is Bitcoin doing here? All right, Bitcoin, go down, bro. Stop trying to mess with our heads here. If you want to increase your win rate, this is what you do. You go to the emoji section, you look for the magnet tool, and you click on your target. And then you just spin this around and make it as big as you possibly can. And then the price just goes right to it every time. Look, it's like magic. This magnet tool is responsible for making the community hundreds of thousands of dollars. just keep it on your charts whenever you jump in, guys. All right, got a good strong reaction. 5-minute order block populated. Where's that 10? That's a 10-minute. The bigger it is, the more power it has. Yeah, exactly. Just don't make it too big. You might break the chart. You don't want a lunar crash or anything like that. Here we go. I should do the magnet thing from now on. Yeah. Yeah. There's some people that go all out. They will just, ever since these emojis thing came out. What is your target? My target is, well, technically I want a few things to happen. So this is the target of an SFP, not my target. I don't choose this target, right? So whenever you have an SFP structure like this, you never ever choose the target. The target is always chosen for you. It's the local low, right? If you're doing an SFP from the bottom, right, it's the local high. But if we break this, we also get a change of character at a range high, right? This is the high of the local range here. So if we get that change of character occurrence, we could come down to start targeting other local areas where this demand zone is here at 94.5. If we break past that, then that tells me I can stay in my trade longer. If we get continuations here to target the previous value area high, where this 786 golden pocket zone is from the pull from this low to this high. So this is my ultimate target, but it's up to this being broken and up to this being broken as well. The SFP is the lower high it did. Yeah, so you want to look for your strong low, right? So if you know market structure and you look for a 2 candle pullback and a higher high, you got to break a structure occurrence and you create a strong low during that. And when we had this here, we didn't have a full body closure above here, but when you have a wick past a previous wick, it still counts technically as a break of structure. And then this became the strong low. So after we SFP'd here, this is the SFP candle right here. This was the confirmation candle. This was the moment that we knew that it's very likely for the price action to rotate back down to that strong low. And what you got to watch out for is it might not be broken. So you have to watch in the lower time frames a potential opposing change of character that could induce your stop loss from being hit. But yeah, this is our target right now. I'm using 5x leverage. So I'm not... So I'm going to rotate my stop loss from here to here. Why would it go down if the wick is higher? That's a good question. Liquidity is your answer. So if we come up and we grab previously added liquidity, it's a warning sign when it closes back, when price gets acceptance back inside the range, that liquidity was used as exit liquidity and it can draw the price to come down. So that induces a drop. And when there's no liquidity taken anymore above us, which there likely is now, just added some more up here. And we know there's some up here at 96.2. But locally, internally here, we'd start targeting where our opposite, basically we start targeting the other side for liquidity as well. But yeah, SFPs are great warning signs of market maker activity. They're exiting the market. I don't like that candle. Let's see how the next one behaves, but I might be closing some early. We're like a fraction away from testing a 10-minute order block. We tap that, that might bring us back down. Wicks can be reclaimed. But when you see a buy shadow like that, no wick, no opposing wick, this is called a hammer. Tells you there's a lot of buyers at play right now. Remember, this is a strong low, so it might not be captured, but you would definitely want to target it when you see an SFP. So yeah, it's super important what this candle does, because it might have me close a partial. But we're past our 1-to-1, so if we close half at our partial, we can't lose anything but fees. Two minutes and 46 seconds. I know these morning calls normally end at 9, but if we're in a trade and I gotta babysit it anyways, might as well spend it with you guys, right? Kind of learn together, especially if no one's ever traded an SFP. It's good to get your hand held a little bit. Will you also be doing your streams as usual time for the EU? Did I read that right, peasant? Yeah, like the streams to the community, I'll be doing those at the same times every day. Yeah, those aren't changing. And if they do change, I'll give you guys like some notice. But yeah, all the community stuff I'll be same times. Even the trade hunting calls, like tomorrow when we do a trade hunting call at like 9:30, we can start our day doing the lives on YouTube and then jump right into continue it off in the community call. SFP means stop freak out pattern. Yes. Yeah, that's the new name for it now. Yeah. Fake out pattern. Yeah, stop fake out pattern. It stands for any noobs. SFP stands for swing failure pattern. There are different types of swing failure patterns, but I always teach the same one because it's the most reliable. We have a coach, his name's Lucas. He teaches the community on Thursdays. And like he knows pretty much every type of swing failure pattern you can think of. He's really, really good with market structure. Like I learned a few things from him, honestly. Let's dissect this a little bit further. The 3-minute. All right, we're crunching. Right, so here's a vector candle right here, a 3-minute vector candle. You see how they usually get reclaimed relatively quickly? Right? Important to watch them. They're really great for confluence. If you want them to be a part of your core rules, you can definitely add them as part of your rules. So for example, if you want to have a vector candle rule set, you could have like I will not enter a long unless I see a vector candle at a value area low after a bullish divergence and we're above the VWAP. And like that could be like, or you can, one thing that's really, really helpful with vector candles is if you have it, if it was your confirmation candle for a change of character occurrence. Let's say we had a vector candle close like way down here, right? And like the candle like started here but ended here, and it was all a vector candle. That could be a great warning sign. All your rules are meant for a short, but maybe the R&R is not there, right? So you can use a vector candle to tell you, okay, we're likely going to have a pullback to that point where the vector candle begun, right? So you can use that as an indicator. You could wait for a potential pullback for an entry to kind of increase your patience. 1 minute. All right, we got 1 minute double bottom structure ascending. And the story being told here in the higher time frames is the hammer, right? We're getting that hammer reaction. So I think it's good to take some off the table if we get a higher high here on the 1 minute. You can either take 50% or let's see what we're at. We're at a 1 to 1.8 based on our active stop loss guard here. 1 to 1 since our original. Okay. And hopefully we break this low. Looks like we failed off of it, so I'm not too concerned about it now, but if we did get that higher high closure, I was getting ready to close about 75% to 50%. You're risking your job to watch Kyle, bro. There's tons of opportunities. You don't need to do that, man. I get it if you're on the hunt for money and your job's not paying you very well. I've been there before. I used to work at a call center, and I freaking despised it. It was around the time when I started trading, and I would hide in the bathroom. Whenever I had a bathroom break, I was just there, like, on my phone, trying to figure out trading and try to trade. Yeah, I would watch all the degens. Like, Crypto was the one I watched a lot when I first started trading, and that guy cost me some money. Until I learned back testing. When I figured out back testing, that's when I was like, I'm gonna back test what the YouTubers say. Is what they're saying true? Is what they're saying actually accurate? And then I would like back test it and figure out, oh, okay, none of what they're saying is true. And it really lets you pick like the proper people to follow when you figure out like how to back test like on TradingView with replay mode. And there's some people out there you got to be careful about following, guys. I've learned to, and you'll find the better you get as a trader, the less you want to watch YouTubers, anyways, unless they have the same kind of core rules that you have, right? If they follow roughly the same kind of rules that you do, it's good to have like a second opinion of what's going on in the market, but just be careful who you follow. I've been burned before following people when I first tried to figure this stuff out. Both what? YouTubers lie to us? Yeah. What order block indicator am I using? So I use one by 11x. It's MTF OBIM. Multi-time frame order blocks in balance. So it's looking at all local time frames from whenever I'm looking at on my screen, it's going to look at the local time frames and see what's available. So these are all 1 minutes right here. It's looking at the 3 minute right here. It's got like a 5 and a 10 minute in front of us right here. A 30 minute as well. 30 minute one was just created and just mitigated. Like this is the 30 minute one. You can barely see it on your side probably. They're grayed out when they're tapped, so you know that they're mitigated. We have a new one created right here. But I love it because it's multi-time frames, so you don't have to keep switching between different time frames. And it's accurate. Like there's some order block ones out there that you're going to have to learn how to identify an order block before using it, because if you can't, then some of them lie to you. So just be cautious about which order block tool you use. I know Luxelgo has one, and that is like the accuracy is like close to like it's like 60%. That's a free one that you can use. Unfortunately, the 11x one's like $600 if you want to get access to it. But it comes with a bunch of other stuff too. Fanova, pardon my French, but Fanova InvestiShare 100%. And I had both. Oh, I see. Yeah, the InvestiShare side's technically cheaper. Access to the same thing. Fanova, amazing community. That's where like most of us are hanging out right now. But the InvestiShare side's getting a little bit more active now. But yeah, same courses on both sides. I'd recommend taking the courses if you're struggling to learn how to trade. I have it set up so like there's a day by day, like what you should be learning first. So day 1 is a really, really basic stuff until like day 4 is when you start learning about risk management. And like day 30, you should have like, you have access to 5 different trading strategies within the course. So you can learn quite a different ways of trading and how to build your own rules. All right, so this is looking all right so far. Where are we at? 1 to 0.5. You get up at 6 a.m. to watch me. Thanks, man. That's the downside with all these different time zones. I'm adding more to the course this week too, by the way. I don't like the Fibonacci section of the course, so I'm like redoing the whole thing. It's just not very clear. Man, volume's dying right now. You can do it. There we go. Right at our local low. Need to break that. This will be our 1 minute strong high. There we go. And we're almost at our target. All right, then, even though this is our target, doesn't mean you have to get out, right? It's good practice, obviously, to get out, but we want to see what kind of reaction we get to the change of character occurrence, because this is a higher time frame change of character right here, right? If we break that, that could induce a drop even further. All right, my alarm just went off for the crossing. Sweet. There we go. Target hit. Now let's see. Let's go with the higher time frames, 5 minute. See how this behaved. We got a fair value gap from the 5 that could cause a retrace. I'm going to take some off the table. Close. Market, close, amount. I'm closing 75%. All right, cool. There's some people that look at my charts without like talking to me or looking at signals. So sometimes I'll write little notes like this in case anyone's watching my chart. All right, great job, guys. I can move my stop loss to break even. And now we can let this ride emotionlessly, right? If you have another set of rules met, what you can do is you can add equal weighted value of your trade to the trade. And if you find a new stop loss during that, see, we get a break of structure right here for continuation, and you add to your existing trade, you can add equal weighted value, have your stop loss here, and let it ride. That magnet might have broken the charts a little bit, so we got to move it down here. I got a 25% moon bag for the rest of this setup. But this is our next target right here. Brian says I'm a jerk for taking his time. I'm sorry, Brian. This trade is too good. So Brian's our probably our most bearish coach that exists. We call him Bearish Brian. He's doing a call right now with the community, and I'm probably most of you guys are probably with me right now, or watching both. But yeah, guys, we got the change of character. We're at a strong, like our range high. We are at a demand zone here that we got to watch out for. We built a couple order blocks. We just got to watch out for them along the way down. That liquidity right below it could induce a reversal, or at least a short-term pullback. But the key core area you're going to want to watch out for is definitely around 93.9, where this previous value area high is. We could build like a Wyckoff model too. So just watch out for this area in case it induces a bounce. I will be giving a signal today if we come down here for a long. So you can watch out in the Discord, and I'll let you guys know if and when I enter in that zone. This current trade's looking really good. So basically if our entry rules are met here for a long, I'm going to close this short. Adi. Thank you, Kyle. No problem, man. Thanks for watching. It's always like our last two lives, we have really good wins. I'm glad that I'm able to like teach you guys and help make money at the same time. Oh man, that magnet too strong. Almost at our second target. Getting there. I gotta send this to back. Oh, I sent to front by accident. Visual order, send to back. Visual order. Send back. There we go. Good morning, man. See your photos with Alex. Man, you are on vacation. Why are you guys so serious? Oh, I picked this most serious picture. We took like 5 or 6 pictures together. Yeah, we basically just hung out. I got to meet his family, got to meet his wife, his baby Odin. His baby didn't cry once. He was there for, I think, like 3 or 4 hours. They say Kyle's not a bear, but I just saw him shorting Bitcoin. I'll make money along the way down on Bitcoin, but obviously I prefer it to go up. I'm biased towards Bitcoin because of my portfolio, but I will scream through the rooftops that it's time to sell Bitcoin when it's time to sell Bitcoin. Like when all my macro indicators are met, especially, I tell everyone the moment that the top is in, the moment the bottom is in, when I'm buying, when I'm selling, kind of thing, in the macro picture. There's a time to hold and there's time to like sell, right? You don't want to be holding this thing through the bear market, because we know how terrible the bear markets are for crypto space. But I do think that this bear market is going to be a little bit different. Our drops are going to be slower, and our percentage drawdown isn't going to be as extreme as like 90%. I don't think that's going to be the case this time because of all the institutional involvement, all the legal requirements for holding with the ETF providers. I think that this bear market's drop is going to be a slow drop for sure, especially with all the ranges that we've been building along the way up, which we never do, right? When we look at Bitcoin's price action historically, we just go straight up. We don't really consolidate. The longest we consolidated, I think, is 30 days at a previous all-time high. Then after that, it was like always less than 30-day ranges. Not these like February to October ranges or these November to February ranges that we've been building. It's wild. Can you look at some of these? Yeah, while Bitcoin's doing this thing, I could take a look at those assets, and then I'm gonna head out, work on some stuff with the community. But Render, TIA, CRO, and TAO. Look at Render first. Last time we looked at was on April 16th. What were you doing then? April 16th was around here. So I had these boxes. Well, this is like a demand zone box. I don't know why I have it set up that way. The supply concerns. Looks like we're looking at this double bottom. Another supply concern. Okay, so yeah. We bounced off of a macro downtrending resistance. Used it as support. Got to break a structure occurrence to confirm it as support right here. This gives me the same kind of vibes that Bitcoin did when it confirmed its big move back when it was at like around 16K or 20K. I'll show you what I mean. So we see how we had like this double top, and then we came down to bounce off this area. Look at Bitcoin, go to the daily. We just hit our second target, by the way, on Bitcoin. This here, where we double topped and hit the downtrending resistance, honored as support with a break of structure. I know this is like much slower time frames, like the 4 hour, but it gives me the same kind of vibes before having a huge run up, right? Now we're at the downtrending resistance here that's been holding us down since $11. We broke past that. We have not confirmed it as support yet, I believe. Let's take a look. We did confirm it as support. Okay. When we came down here, had this pullback, got this higher high. That's when we confirmed this level as a form of support. We had the confluence of a previous value area low, so there's lots of reasoning to bounce out that area. It doesn't have to be just based off of this. But right now, we're kind of building a rounded top. The behavior, however, is a little bit bullish. because when we came down from this rounded top, we built an SFP, a bullish version of what we were just trading. So this SFP came when we grabbed the liquidity from these lows. Yeah, we had liquidity here, stacked some here. We grabbed some of it here, actually majority of it here, and we came down and swept the local newly added liquidity, and then we closed inside the range. So this is a bullish SFP, like a local one, and that means we'd be targeting the highs, right? And we're on our way up there right now. If render gets a higher high, then that might help induce a larger volume move to confirm this macro resistance break, but we have a lot of barriers along the way up. But it's nice to know that we have that potential confluence of a more of a massive target of these extreme highs around $10. Kind of giving me the same kind of vibes as DOT in that sense. Like DOT is looking like it's trying to rotate to its range high too, its macro range high. But we do know for sure that we're trying to target these local highs. So that's telling us that render's got some relative strength right now against Bitcoin. Bitcoin's dropping and this thing's trying to confirm to go up. And the drop that Bitcoin's doing is only inducing a small pullback on render. So that's a sign of relative strength. You could pull a fixed range volume profile here and see how we behave off of it. We got like a recent tap off of a volume shelf close to the POC. So we had other reasons for it to pull back, not just by Bitcoin providing that, inducing that drop with this pairing liquidity. Zoom back in on Bitcoin. We got a decent bounce off that area. 5 minutes, really important to watch right now. If this engulfs past this candle, it's a good reason to close the rest of your trade. But we have quite a bit of distance. Your stop loss should be at break even. If anything, you can move it closer to the profit zone. We don't technically have a better strong high to guard our capital. So if you're moving it, it'd be purely based on emotion. We do have this as a guard or an invalidation point. So you could move it above, anywhere above this area. But we do not want this candle to engulf, or else our chances of it coming back up is much, much higher. And it's a good time to pull out the Shi-High indicator. Whenever I see the Shi-High indicator give us a diamond off an engulfing candle, or our tweets are a engulfing response, then I'm getting ready to take action, usually on some stuff like that, especially on the 15-minute time frame. So we looked at render. Let's look at TIA. I'm going to come back. Well, I'm going to wait 25 seconds first on Bitcoin before I look at another asset. Is how this candle closes is important. Looks like someone put a strong magnet up there. It wasn't me. I didn't do it. Mine's right here. Alright, that didn't golf, but see how it go. There we go. The story's a little bit more clear when you look at the lower time frames here. Alright, I moved my stop loss. I'm going to move mine to 95 to 59. Move mine so close to the entry, it's really hard to grab. There we go. I'm gonna close another 50% right here. Only 50% of the active position. Awesome. Okay. Order block. We got some buy walls forming. 94,000. We have a buy wall of about 300 Bitcoin, which isn't too big, but it's starting to build up. And we need to have 1,500 Bitcoin bought before getting there. But yeah, we're starting to build a buy wall. There's confidence being built at 94K. So watch out for that level. If we go down, we got $500 to that price point, but now we're getting close to 400 buy wall now. So that area is getting bigger. Not very much sell side confidence, but there's some buy side confidence building. Where is that? Right about. Okay, it's pretty low actually. About here. Or the buyers are waiting. A slight undercut to this demand zone. Nice, there we go. All right, cool. So close 50% of active position at this low here. There's 25% of my positions remaining. Oh, sorry. I guess it's lower than that. It just seems like okay, it's the balance seems high because of the gains are good. A good problem to have. Can't do math in my head there for a second there, sorry. Can we look at AVAX and CRO? We take a peek at AVAX really quick. We're coming down to that VWAP. There might be algorithmic responses to that. AVAX also double topped. We're in a demand zone right now as we speak. It's looking structurally very similar to Bitcoin. It did not give an SFP. We didn't grab that local high like we saw with Bitcoin. But we did get the double top break. Personally, I wouldn't have entered the short on this one, even though it looks transparently, obviously it's a double top. It's just we didn't grab the high, which makes me feel normally in situations like that, I would look for another setup. Even though I know it's likely going to go down, I typically will look for another setup if I don't feel confident in its structure. So right now we're in this little local demand zone for AVAX. We got to watch out for potential reversals here. If we break past this zone, then we will be watching the extreme lows. And luckily, we have quite a bit of fair value gaps here. So the move should be relatively quick. Just like we came up, we could fall down just as quickly because of the behavior of these candles right here. I could pull out a tool called like FF, like fair value gaps. You can see them right here. We can anticipate price action to move quickly between them. They're a good confluence indicator, especially if you are an emotional trader. If you're an emotional trader and you want your targets hit fast, you can use fair value gaps as confluence for fast trades. There's a strategy called like burst trading, where you're basically, your goal is to get in and out within like a single candle. I don't normally recommend those kind of trading strategies, but fair value gaps are usually a core part of those kind of trade setups. If you zoom out a little bit on AVAX broke macro downtrending resistance, right? What a key area that we want to have broken for AVAX is this level right here at 22.93. Looks like the last time we looked at it, this is likely a daily high. That's why it's cutting through like that. So if I zoom out on the daily, yeah, it's a daily full body high. We're using that full body high right here as a form of resistance. But what's good about this resistance, this pullback, is that if you're a swing trader, you would want something like this, a proper pullback before breaking the high, so you can use this as your stop loss guard. The measurable target for this, if we do get the break, like the buy side liquidity in combination with the current active momentum, it gives us the target of way up here at 33.52. However, just like every setup, that's especially a swing trade setup like this, I know Sui definitely did a really good job at hitting its swing trade targets, but it's already hit those targets, right? Like we've already way surpassed its double bottom posture, right? And so that's telling us that Sui's got relative strength over AVAX. There's more people paying attention to Sui than there are people paying attention to AVAX. So the timing is insanely important. So Sui did its move alongside with Bitcoin and then kept on running when Bitcoin was slowing down. AVAX is at an area where you want to anticipate those big moves, but because of the timing where Bitcoin might be preparing for a correction, AVAX might not be able to hit those the potential target, right? But we have liquidity stacking here, 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 and here, and then it starts to go cold up until here. So I'm anticipating that if it does break the higher high, that we might not hit the measurable target. We might slow down around 28 or $29 here, where all liquidity ends in confluence with that POC and the previous value area high that came from this active range right here. So this double bottom is likely going to give us acceptance into that value area, and then we'll probably be halted at that value area high. We'll basically behave the same way we did over here. If Bitcoin ends up getting to like 101K from proper acceptance into its daily range, then that's a different story. But we're actively watching it fail right now. But we're coming back down to, what do I got open here? Oh, our Shi high is open. We're coming back down to a previous range value area high now. That's our next target. Our magnet kind of broke the charts. We're below the VWAP now. So we now have an additional guard to our capital. When we get below the VWAP and we have price close below the VWAP, and even better, give us a pullback and a break of structure, then we can validate the VWAP as being acted as resistance. Right now, like we got like a signal candle representing resistance, but not enough to trust it. We can still easily come back up. Now, I'm going to delete this because we barely respected it. We only had one bounce off of it. And then we got a break of structure immediately after. Let's delete that. So our next zone's here. And when you're doing these zones, when you're looking at areas of confluence where like you're boxing a zone or preparing for your trade setup, and this is why patience is very important. You want to wait for structure to define a reversal and not just limit order in on a long or something crazy like that at these zones. Like Alex of Crypto, Brian, Sometimes myself will give these zones where you prepare for trade setups, but it doesn't mean we're jumping in on a trade there. But it does definitely means we have alarms there to tell us that we need to prepare for structure to define those entries. And we're approaching another zone right now where we prepare for that potential structure. What a drop, though. We're just going straight down. So now we're on our way to our next target. Right here. We're already pretty close. Our trade's evolved into a 1 to 19. Your net R&R wouldn't be in 1 to 19 though. It would be based on our entry stop loss and your closes. Like 1 to 7 right now. It's nice seeing you so calm trading. You gotta be. Well, that was a problem I had when I first started trading. My heart would race all the time whenever I was trading. And when your heart races, you get anxiety. So it took a little while, but if you're not calm while you're trading, it means you're usually risking too much money, or you didn't follow your rules, so you don't know your statistical probability. And that unknown creates anxiety. If you know your statistical probability by following the same rules over and over and over again, and if you went in replay mode and back test it, and you saw that you have like a 65 or a 75% win rate following those rules, but you just didn't follow one of those 4 or 5 rules before entering a trade, then that could induce anxiety, and that anxiety can make you do weird things with your trades. So just be consistent and you'll be fine. We're very close to hitting our 3rd target. Okay, we've got, let's look at CRO for Esmir. We looked at AVAX a little bit. While we're waiting on, oh, we don't have a CRO layout. Let's look at CRO here. Chronos. You can look at it on OKX if you guys want. All right, last time we looked at, we did a long here. I remember that one in February. That was a crazy setup. This was a crazier trade. I didn't jump in on this one, but I was waiting on it and it just went straight up. There was like barely any time for you to get in. But yeah, we broke the downtrend momentum again, just like we did here. We started off violent, just like we did here. But then we hit this like local little demand, like supply zone right here. Kind of like the same kind of concerns that I have with AVAX, where the liquidity kind of ends, right? We kind of like halted there, built resistance. But now we're like kind of building this larger, we're fractalizing, right? We're fractalizing ascending double bottoms. So we have an ascending double bottom here, an ascending double bottom here. But we could be using those internal structures to warn us of a larger ascending double bottom. But the fractalizing is when you see like, there's different ways you can use that term, but one way you can use the term is when you see micro versions of a macro version of the same structure. Like a really good example as well is if you see like an inverse head and shoulders inside of like a larger inverse head and shoulders. And like each shoulder is basically an inverse head and shoulders. That's another form of fractalization. And it's key warning signs that there's an algorithmic market maker trying to paint the picture rather than like a manual market maker. Because the algorithmic market makers, especially ones with a lot of money, they kind of like try to paint the picture clearly as they can to get retail to do what they want. It's pretty intense. I'm still working in my pitch. Yeah. Sorry, I didn't know what that meant. Measurable target for this structure. We have the double bottom here that could bring us through. Right now we're flagging a little bit. That could bring us to this neckline. Right, and that measurable target kind of brings us there. Almost. We're obviously going to have to watch this as a supply concern that could induce a drop. And we could end up being range bound here longer. But if we grab all the buy side liquidity from above these wicks, that could induce a much larger move back up. To 16,371. Solana is down towards that target that we were talking about for the short that we didn't really want to, well, I didn't want to take because structurally it was a kind of a mess. So we're at a value area low. The next area, if we get a continuation, is this demand zone here. Let's go back to Bitcoin really quick. Go back to the 15. Oh, we got a decent bounce off that zone on the 15 minute. 5, 3 minute engulfing. Pretty close. Well, I'm happy with my trade. I'm going to close it. Amount. I'm going to close the full trade. Close all. Congrats, guys. That was a fun trade. It's nice to trade with someone instead of by myself. It's basically the reason why I built the community to begin with. We got, our second trade in since we started doing these regular morning calls. Let's see, trade visibility. Here we go. That was a great move, guys. All right. Well, I got to head out. I had an awesome time trading with you guys. I'll see you guys tomorrow morning. And I'm sorry, Brian, if you're watching this, that I kind of stole some of the members to watch this live. But tomorrow we'll be doing a trade hunting call as well. I'm completely out, by the way, guys. I'm not in anymore. So if you're holding this, just be cautious. We have reason to keep going down. We're below the VWAP. We only bounced off the demand zone once. We could come down further. But I've exceeded past our initial target here. We've blown past our other target here. And now we're at our third target. I don't want to be greedy, right? I've made more than I thought I was going to make for the next 3 days. So I'm really, really happy with the results of the setup. So if you risk to lose, let's say you risk to lose $100 on this setup and you didn't close anything till now, you would have made about $900, for example, on this trade setup. If you risk to lose 1,000, you would be getting 9,000. But remember, with your risk, be consistent. Always try to risk to lose the same value every single time until you reach certain milestones. Or if you're compounding your gains, then do the same percentage every single time. Tomorrow, I'll be here tomorrow at 8 a.m. till 9. We gone till 10 today just because I wanted to babysit this trade with you guys. In case anyone's emotional, just walk you through a little bit. Do you not take profit value to close the trade automatically? I don't normally have a limit to close my trades automatically while I'm at my computer. If I'm away from my computer, I will set it up. Even if I'm away for only 10 minutes, if I think I'm going to be away for 10 minutes, I'll have it set up just in case. Because sometimes you get those wild candles, right? And if I'm going to sleep, I'll put my stop loss in a guarded zone and move my have a limit order for an exit of my position while I'm sleeping. All right, cool. All right, guys, you have yourself an amazing day. Thanks for jumping on. I'll see you guys tomorrow. Any course coupons available at the moment? I can make one for you. I'll call a coupon free breaker. I'll make it so that 10 of you guys can use it. So free breaker, I'll give you guys like 75% off the first month, so you can try it out. That coupon will work for you in 5 minutes. All right, cool, guys. Have yourself an amazing day, and thanks for watching. Is it possible to long from that position? No, there's no reason to long from here unless you're catching the knife. There's no structure to define a long here. Need more rules, more structure to find a long.